Now, energy expert Kojo Poku says the exit of Exxonmobil will not deter investors interested in the country's oil fields. Exxonmobil, a US-based oil and gas firm, exited Ghana's oil fields and subsequently relinquished 100% of its oil exploration rights in the deepwater Cape 3-Point block in the western region, explaining that it was unwilling to extend its initial contract signed in 2018. But Mr. Poku tells Joy Business that Ghana is not short of options after the exit. He joins us via Zoom to throw more light on this. And thanks so much for your time, sir. I'm not too sure I've heard your thoughts yet on ExxonMobil's exit recently, but what did you make of how things turned out? We initially had great hopes.
Well, good afternoon and good afternoon to your viewers. I don't think as a nation we should worry too much about a corporate decision made by ExxonMobil. Ghana is still an exciting destination when it comes to upstream oil and gas. As I mentioned earlier, we are still young in that industry. We've only been doing production for 10 years. Big companies like ExxonMobil have certain parameters before they invest in the country. They would like to see large oil deposits. They would like to see big exploration fields to last them for about 20 to 25 years. I don't think they saw that in the block that they had. And in some instances, when they don't see that, they would have the option to look at other mergers and acquisition in our upstream market. Maybe they did not see that. That is also hampered by the international view that some companies want to cut carbon emission in 2030 to 2050. So I don't think their exit is entirely to be blamed on the environment in Ghana. I think the prospects in Ghana is very positive.
Yeah, because I was going to ask you if the concerns raised about our oil deposits was legitimate enough for ExxonMobil to exit the country.
No, you see, every company has their investment ratios. ExxonMobil is a huge company, and when they invest in a country, they bring all their investment and their resources, and they have a base. You know, when you go to Nigeria, you look at their investment in Lagos and other parts. In some areas, they have a whole estate where it's only ExxonMobil staff that live there. So they have a way of doing things, and maybe in the short to medium term, they thought they would rather not go further with the Ghana prospect. I don't think anybody should read into it that the fields in Ghana are not prosperous or are not as prolific as they should be. I think they are, and smaller, mid-sized companies can do very well in that exploring that block.
And so there were fears other investors would lose interest in our oil fields because of ExxonMobil's exit that you have discounted. You don't agree with that. To what extent do you think that we are going to be affected by this exit? You already point out that, you know, ExxonMobil, when it's coming to your country, comes with other investors as well. To what extent do you think will be impacted?
Well, if you know the history, as far back as I think 2009, 2010, ExxonMobil was aggressively looking for the Tullow block. I think they wanted to buy into the Jubilee field. That didn't happen. They came back again, and they've gone a 2.5 years exploration cycle, and they said, look, they are not. It doesn't mean they can't come back. What I'm saying is that mid-sized companies, okay, might be able to explore that field and look that they can get returns on their investments. People are saying that we should look at tax regimes and all that. I think it's too early for us to panic. People have cited ACARE. I think ACARE has their own peculiar reasonings for doing what they're doing. And in due time, we would all see it. But mid-sized companies that have good liquidity can still make some good money. I honestly don't think the fear that people have that because the international or Europe and America are cutting carbon emissions up to 2050 means that crude oil is going to go extinct. It's not true. Crude oil has another 50 to 80 years life on this planet, and companies are still investing in upstream business.
And, well, here's a good part. GNPC already are showing that there are many investors looking to replace Exxonmobil. Take a listen to Group Managing Director for GWEL, Kwame Osei-Prempeh. Tell us about that.
Believe that there's no way that you cannot have another investor. No, there's no way. Indeed, Exxon is the largest explorer in the world. Yeah, and they believe, the way they assess their risk is different. So what if Exxon says that they assess the risk and the quantity that they will get is not to their satisfaction? Any middle level explorer or the oil company will find it suitable. So as at now, GNPC has assured us that people are knocking at their doors. So now that if Exxon goes out, that means that our investment has gone. Indeed, what we are even hoping is that we've already expended money in the relationship with Exxon. So if a new partner comes in, our investment in Exxon is going to top up our 5%. So we may even end up getting about 7 or 8% a share in the new deal instead of the 5%. So we believe it's not going to be difficult at all. We're going to get an investor coming in.
So Kwame Osei-Prempeh saying there that people are already knocking at the doors of the GNPC. That sounds good. Just wanted to find out from you, what options should we explore? What should be our approach this time in determining which investor to select?
Well, as you are aware, the new petroleum law does not allow a one-on-one negotiation as it was the case in the past. Now, all petroleum awards has to go through a tender. So I'm thinking that block will have to come back into the basket. And when the ministry and GNPC decides to do the next tender round, that block will be up for tender. I don't know that if there's anything this year, maybe next year they will prepare the documents for bid rounds to happen next year, because we might have more information on some blocks that is being cancelled, because there's a lot of companies that are sitting on blocks that are not doing anything. And to basically make sure that our upstream is very vibrant, we need to abrogate those petroleum agreements and put them back to tender. Yes, we've come out of COVID. 2021 is not the best time to do this. Even 2022 is a bit slippery. I'm thinking maybe 2023, the world economy will have fully recovered. My caution to GWEL will be that they should not be too much in a hurry to be taking up percentages in these oil companies at this early stage where the risk is high. They should bid their time, and when the companies, because if GWEL decides to go up with their percentages, it means they have to contribute sizably to the exploration cost, which is risky. Okay, so I think that they should just keep to the 5%, take it baby steps, stick to the little percentages. When there is the discovery, then they can go in and basically exercise an option to up their investment. At this stage, I don't think GWEL can afford to be risking the little money they have in exploration at this stage.
My last question to you was going to be about timing, but you answered that perfectly. You're saying we should look at the next couple of years and not be in a hurry to make a decision.
Yes, definitely. In terms of 2021 and 2022 is going to be recovery year. The price of crude is really high now. It might just be because the OPEC countries have cut down production, and if they bring production back to the normal levels, the price of crude will come down. So yes, companies will be looking at these prices and indicators around the world to decide when they will start doing more drilling or more production. 2022 will give a lot of companies a lot of indication of what lies ahead. So as a nation, I think if we want to do another bid round, it should be somewhere in 2023.
Great stuff. Thanks so much, Kojo Poku, energy expert there. Thanks for your thoughts on this matter. I appreciate it.